I'm Sukanya from MCOM Final. My seminar topic is Advantages and Disadvantages of Tax Planning. Meaning of tax planning. Tax planning involves conceiving of and implementing various strategies in order to minimize the amount of taxes paid for a given period. For a small business, minimizing the tax liability can provide more money for expenses, investment, or growth. In this way, tax planning can be a source of working capital. It is an arrangement of one's financial affairs to avail exemptions, deductions, concessions, rebates and relief which is permitted under Income Tax Act. So tax planning is a legal way of reducing income tax liability. Advantages of tax planning. First one, to minimize litigation. To litigate is to resolve tax disputes with the local, federal, state, or foreign tax authorities. There is often frictions between tax collectors and taxpayers as the former attempts to extract the minimum amount possible while the latter desires to keep their tax liability to a minimum. Minimizing litigation saves the taxpayer from legal liabilities. Here, litigation is the process of taking legal actions. Tax planning minimizes the litigation between tax administrator and tax assessees. Second one, to reduce tax liabilities. Every taxpayer wishes to reduce their tax burden and saves money for their future. You can reduce your payable tax by arranging your investments within the various benefits offered under Income Tax Act 1961. The act offered under the act offers many tax planning investment schemes that can significantly reduce your tax liability. By reducing tax liability, it saves the surpluses for one's personal and social needs. Third one, to ensure economic stability. Taxpayers' money is devoted to the betterment of the country. Effective tax planning and management provide a healthy inflow of white money that results in the sound progress of the economy. This benefits both the citizens and the economy. It helps in start new scheme for the progress of nation. Fourth one, to leverage productivity. One of the core tax planning objectives is channelizing funds from taxable sources to different income generating plans. This ensures optimal utilization of funds for productive causes. It brings about the fiscal discipline in one's life and thereby retaining the income for productive investment. Fifth one, for taxpayer. Taxpayer has to pay less tax by using tax planning because he is using all available exemptions, deductions, reliefs and rebates. All is done within the boundaries of law. Sixth one, for government. To use deductions or exemptions, you have to invest money in some schemes which results that your money is transferred back to the government and then they can use it to develop the country. Seventh one, for society. If government invest or start any new project or even tax payer invest his saved money, so he will generate employment. Government can invest in better projects which develops society. Eighth one, healthy growth of economy or nation. Tax planning promotes healthy growth of economy through savings of income tax liability. Government provides relief for the establishment of business in backward area. Ninth one, employment generation. Tax planning generate employment by investing and commencing the new business. It creates job opportunities since a large number of taxpayers depend on the services of the chartered accountant. Tenth one, reduce the overall cost of production. Tax planning reduces the overall cost of production by not paying the tax that forms a part of the cost of production. 11th one, reduction of stress. Eliminate necessary stress and uncertainty by knowing just what your tax liability will be and make informed decisions, ultimately obtaining peace of mind. Disadvantages of tax planning. First one, Needs of expert advice. There is necessary of hiring experts. Tax planning needs professionals who guide the taxpayers in making use of tax provisions to reduce the tax burden. Large number of taxpayers depend on the services of chartered accountant. Second one, time consuming. Tax planning requires the devotion of time. Here, the taxpayer takes a long time to decide in which scheme he have to invest money or what kind of business he has to start or establish in order to avail the deductions. Third one, increase in cost. Sometimes tax planning may become costly affair to small business persons who cannot afford to pay fees to the professional experts who guide them in making use of tax provisions to reduce the tax burden. It increases the cost or expenses on expert advice. Fourth one, continuous amendments in tax law. There is frequent changes in tax law. There is no certainty in long-term tax planning due to frequent changes and amendments by the Finance Act. There is changes in the budget, exemptions, deductions available from time to time. Fifth one, procedural difficulty. Every taxpayer has to follow the procedures. He has to obey the law. Every taxpayer should have the knowledge of law. Every taxpayer can minimize the tax liability by using disciplinary methods. Sixth one, limited and defined scope. As the process of tax planning consumes more time and involves high cost, it has limited and defined scope. Thank you.